Good afternoon, traders. So, welcome to Forex Friday. So, today is the 19th of May 2017. Okay, so we are looking at cable over here and the different strategies that we took the trades for the week. So, we took trades on two strategies itself. So, one of them was the morning glory strategy, which is an intraday strategy, right? And the second one that we took trades on was the smart money strategy, which was the end of day strategy. So we hold on to the trades for overnight positions. Okay, so we're just going to look at a trade review on for the week. Okay, so let's now take a look at that. So as you can see, this is all the account statements which logs all the trades and the accounts cumulative. All right. Now on the trade journal, I would have logged in all the trades here, as you can see over here. 5 trades I've taken, and on days which I've not taken a trade, I've also mentioned why I did not take a trade when there was no trade at all. So you can see that we've been taking it from the 9th of May onwards on this live journal, that we've not made it public as well on this intraday morning glory strategy. And you can see over here that in terms of the trade positions, you have to record down as much as detail as possible, because this is a reference point for you. Okay, this is a reference point for you. Most important thing is that the word cumulative, professionals always think in terms of cumulative trades, not just one trade that made you the money. So you can see over here we took 5 trades over here, and I've also made the journal much more detailed, where I've got asterisks, there are comments there as well. I've written here limit entry. There was Bank of England news as well. This one over here as well on the 12th of May. This account where we took on a full 3 lot position over here. I took it on a different account by mistake, so it was not this particular account that you are looking at. I took it on another account, and then you can see all the rest as well. Okay, so that's what I just want to give you an idea of how to track all the trades in the journal. Now some people might say, oh Tiru, and I've had this clients come up to me, over the 20,000 traders that we have trained and mentored over conferences, they've spoken all over the world, is that they come and ask me, Tiru, but why do we actually need a journal? Because if we just have those account statements, that already tracks it. The reason for that, traders, is that you need a journal for a couple of reasons, right? You need the journal to first to record why you'll be taking the trade, have some key levels entered into there. That's the first thing. The second thing also is that to compare your performance over 2 curves, as we call. One is called the system curve, another one is called the cash curve. We talk a lot about this in our traders toolbox videos. And the final thing is that over here is also to measure your stats as well. Okay, and I know some programs can measure your stats and everything. The main reason why we really have a trade log journal is also to have all the comments in there as well, on what uh, we did on certain trades, why we didn't take it according to rules. And one really main important thing is mainly for your 2 curves, your cash and system curve. Okay, now this was on morning glory strategy. So how well have we done on that? It was one particular trade I did want to mention to you, which took a small loss in here, which was this one taken on the 17th of May, a 60 pound loss. And the reason for that was, as I mentioned over here, I did scale out over here, because on the basis that there was slow momentum and I had to minimize the risk. Sometimes in the beginning you have to be extra cautious in terms of your money management as well, because the most important thing is that you don't want to give back your profits. Most traders, what they do is that they earn their profits, but they're not very careful and cautious about retaining those profits, and they lose it back to the market. One of the best ways to retain those profits, always concentrate on risk and avoid taking big losses. Okay, now the second strategy that we took the trades on for the week was the smart money strategy. It was the smart money strategy. As you can see, we took 2 trades over here, dollar Swiss and euro dollar, And you can see over here that each one of them, one made 3.24%, another one made 1.56%. Okay, so overall you can see that in terms of pips wise, that made us 341 pips. Okay, and in terms of percentage wise, it made us 4.80. It totally depends on how you want to do your risk management. Whichever way that you do your risk management and money management, you must know your drawdown for each of your strategies. Okay, so smart money is an end of day strategy. As you can see over here, let me just bring up the accounts. In the account statements over here, as you can see, now we can see that basically in terms of the two trades that we have taken on this, right? You can see over here that one of them, two of them actually hit targets, and in how many days? So this was on the 12th of May, and this one took it over 4 days, and here you can see that this one actually took it in terms of, let's see, just in basically in 1 day itself. So this was just all overnight trades, so we're not even in front of the screen looking at it every single minute. Okay, it's not intraday. And you can see it just crossed over 4,032 pounds, just a little bit over 4,000 pounds. Okay, that was on smart money. In terms of, you can see over here, in terms of the results and the stats over here, this is just two trades only, right? So this is just a very still small sample size, but we have, of course, all our stats over the last 2 years. We've been taking smart money on. Smart money on an average makes about 30% each year because we've optimized it now to SM 2.0. Okay, so I think that's that in terms of my Forex Friday review. Now, a couple of other things that I did want to tell you in terms of our trade review. Why do you do all this trade review and have these journals logged in and all? What's the reason for all of that? The reason for that is three main reasons. Okay, three main reasons. Now, the first reason is really that you want to have a cumulative log, because trading is just not about one, two trades. Okay, because you want to make it professional, you want to make it systematic and methodological that can give you a consistent profits and income, replaceable income or supplementary income as well. The next thing is that you want to learn from your trades. You want to learn what you did right and what you did wrong. Okay, so you want to learn both of that as well, and from the mistakes you want to learn how what you can basically improve on those trades. And that gives the third point basically, which is you basically from your trades you want to learn how you can improve and optimize your performance. Okay, optimize your performance and get absolute clarity on the good setup, especially if you're intraday trading. There's a lot for you to remember and to actually visualize as well before even the trade sets up. Okay, right, I guess that's pretty much that in terms of me from this Forex Friday video. Do contemplate on these 3 points on why it's so important to keep this trade log. I can't stress how much important it is, because in our 3-step methodology, stats review is one of the 3 steps which actually builds up your trading methodology, which helps you to get you consistent profits. Okay, all right, that's all from me. And from this video, as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.